Okay, hey guys. I want to talk about something that I hear about a lot, and it's a concern, I guess, in the crypto mining community, where a lot of like there's this kind of tribalism between Bitcoin and Ethereum. Now, how to say? I wouldn't say I'm. If I were to say I'm leaning more toward one side, I would say I do lean more toward Bitcoin in terms of which protocol will be most valuable over the long scheme of things. But I'm not going to disclude what Ethereum has done or what it can do. I mean, Ethereum, if it fails, that's fine. At the very least, it will have provided a really cool, how to say, playground for a lot of crypto experimentation. So even if it fails, the lessons from Ethereum will be applied to another protocol that will work. Kind of like how AOL was the first iteration of the internet, or like how to say Yahoo, right? And then Yahoo got replaced by Google. So we may see Ethereum, that whole blockchain ecosystem, get replaced by another protocol that hasn't been invented yet. Bitcoin, on the other hand, I think it's really it's here to stay as really new money. New money. It really is new money, and Ethereum can't really compete with Bitcoin in terms of money, because I feel like Ethereum's monetary policy, the fact that they have a monetary policy and that it can be changed. I mean, they're fooling around with it all the time. For example, the improvement protocol 1559, which they're going to do like a base fee to burn ETH. I mean, the fact that they can just like come up with stuff like that off the blue and just implement it at the expense of the miners and such, that really, I mean, that's kind of one of the drawbacks of Ethereum, in my opinion. And who determines the monetary policy? And I just recently saw a video by a guy named Dapp University who basically is kind of comparing Bitcoin to Ethereum, and he raises the issue where, well, Ethereum's proof of stake is superior to proof of work, because after the reward block disappears in Bitcoin, all the miners just make their fees off transactions, right? And that could be a potential security risk. Well, my argument, let me actually show that clip.
They're responsible for basically doing everything. So miners get paid two ways. The network creates new Bitcoin. It's mined. That's what the miners are for. And then whenever you pay to send Bitcoin around, you pay a fee, and that fee is going to the miners. And so once all the Bitcoin is ever mined, and we get to 21 million Bitcoin, or really even approach close to that number, the network is effectively going to be run off fees only, which presents a potential security risk to the Bitcoin protocol. And that's one thing people don't really like to talk about. That's one of the reasons.
Okay, so why my opinion is that it is not a security risk once the how to say, the block rewards disappear and miners can only get the transaction fees. And I'll tell you why it's not a security risk. I think the people proposing this argument are only looking at what's happening today. Like, a lot of things can happen, a lot of things will happen from the point where the block rewards are negligible, and how to say how the miners will get rewarded once the block rewards disappear. I mean, that's a long time, and basically a lot of things will change within the space. For example, I think Bitcoin's kind of an all or nothing thing. It either goes to zero or it goes to $1 million, right? There's no, in my opinion, there's no such thing as $100,000 Bitcoin. That's not going to happen. It's either going to fail completely, go to zero, or it's going to be, each coin's going to be worth at least $1 million or something like that. And what happens is, once each Bitcoin is worth that much money, it's almost like the people who hold Bitcoin, like even if you hold one Bitcoin, or you're like Michael Saylor and you hold like 100,000 Bitcoins, you're going to be incentivized to keep the hash rate up in the network. You're not going to, even if there's no reward block to mine, like there'll be guys like me who will turn off our mining rigs from Ethereum, because Ethereum's switching to proof of stake, and we may allocate all that hash rate onto the Bitcoin blockchain, even if there's no block reward, and just to get a little bit of the transaction fee in Bitcoin. The reason why is we own Bitcoin, we have an incentive to keep the hash rate up and the network strong, or else the value of the Bitcoin that we hold will go down, right? So it's almost kind of like proof of stake, but it's a more, how to say, natural, organic proof of stake, where like proof of stake is implementing a new protocol and saying we're totally banning proof of work and we're all just going down to staking. Whereas like in the future, the people who own the Bitcoin, we are literally like the stakers who are going to ensure that the network remains secure at all costs. Because if there was a drop in hash rate and the network security gets threatened, obviously the value of our Bitcoin assets will go down, right? Because it's no longer a very secure network. And when each Bitcoin's worth $1 million, I mean, you better be damn well we're not going to let that happen. We're not going to let the hash rate decrease, because Bitcoin attracts people who are long-time hodlers, and we see it as a long-term store of asset value, right? So knowing that we're going to pass this on to our grandkids, each of us will probably, turn on our GPUs and pay that monthly electricity fee to make sure the network stays at a certain hash rate. So it's more, in my opinion, it's a more natural, better form of staking. It's not like you're forcing the network to stake their coins. Everyone who owns Bitcoin and doesn't sell basically is staking their Bitcoin for the network security. It's like we're all staking our Bitcoin just by hodling and not selling out, right? So that's why Ethereum, like when they implemented proof of stake, they locked up their Ether for probably like 2 years, and they're saying after that, we're not doing proof of work and we're just having these stakers earn all the transaction fees. It's kind of the same thing what Bitcoin's going to be doing. So it's just like kind of in an inverse way, where like Ethereum is doing it, like forcing it and trying to get it done quickly and implementing it in a direct protocol. Ethereum is letting this kind of almost organic creation of proof of stake happen on its own naturally, right? Because all of us Bitcoin hodlers, we're not going to be let just the hash rate fall down. We're going to be incentivized to maintain that hash rate. So if we see the hash rate dip down, we may just buy GPUs or whatever, or ASICs, right? And we'll all contribute to keep that hash rate up, or else we lose our investment, right? The price of Bitcoin goes down. Bitcoin is basically, its entirety is based on its immutability and security. So I highly doubt, like, if the hash rate goes down, guys like Michael Saylor are gonna basically, not start their own ASICs farm to keep the hash rate up. So that argument that Bitcoin proof of work doesn't work out long term because there's no more block rewards and you're strictly getting rewarded off the transaction fees, I think that's kind of a short-sighted argument. It's a very weak argument. Let me see if this guy says anything else.
Ethereum actually has an infinite supply and has inflation built into the protocol forever to avoid this problem. We don't really want to be in a situation where the people running the network.
So yeah, he's saying like how to avoid people from not wanting to mine or stake on their network is they're going to issue more ETH or something, infinite supply. I don't know. I mean, I feel Ethereum can go down a very slippery slope of getting co-opted and becoming much more like the current fiat system we have in the world, right? So it's like a new technology to onboard the same fiat type system. Whereas Bitcoin will forever remain as like a separate, honest, system within that's not ever going to get co-opted. It's going to change, how to say, the big people who buy it more than they will change the Bitcoin network. Whereas Ethereum, I feel like it's going to change to accommodate these guys who are already charged in the fiat system. So I do think Ethereum has a huge potential to become even bigger than Bitcoin in terms of like the financial system it wants to create, right? Like they're going to put stock markets, everything on top of Ethereum. They could potentially do that, and it's capable of handling that kind of ecosystem. But I don't know. I feel like, I mean, if it does end up doing that, it's not really, it's going to get co-opted, basically, the project, and what started as like a decentralized mission will have some aspects of it, but it's basically just going to get, turned into a new financial system for the current people in charge to play around with. Okay, so I can't explain it really well. I just feel like it's not it's going to get co-opted and it's going to get used for nefarious purposes of these large institutional players. Whereas Bitcoin is so strong that it can never be corrupted. It's almost incorruptible, and the people who want to play on the network are going to abide by the Bitcoin rules, and they will not be able to influence it. So I think that's, yeah. So I like this guy's YouTube channel. He does bring up a lot of interesting points, but he even said like, Ethereum has like a monetary policy. So it's like kind of more, it's better, you can't print ETH on a whim or something.
Print new ETH on a whim. All right. Ethereum actually has a monetary policy.
Okay. When I heard that, I'm like, dude, that's the problem, man. The fact that any protocol that says like, oh, we have a monetary policy, like the whole point of crypto is like, you don't have this kind of policy in terms of like how money runs, right? Like Bitcoin, there is no freaking policy, it's just basically, it is what it is, right? It's hard baked into the code. There's no policy that you can change. Like, look here, it says like ETH issuance, inflation, like those two things in Ethereum could be, manipulated, fluctuated to suit whoever's in charge of the monetary policy. And I want to know who exactly is in charge of Ethereum's monetary policy. I mean, to me, is it the Ethereum Foundation? So like now they're trying to implement, right, EIP 1559. So, I mean, you have a lot of big mining pools who are against that, like HiveOS is against that. And guys like me who mine ETH, like, I understand why they want to do it, because to be honest, like profits for the miners are good, but there's no way Ethereum stands a chance if they don't deal with these transaction fees, right? They're ridiculous. Like I was trying to do a swap on Uniswap and the gas fee was like $20. It's like, yeah, of course, no one's going to use that kind of application. And it's going to really stifle the ecosystem. So I get why they need to make improvement protocols. And if I take less mining profits, so things like Uniswap can bring their transaction fees down to pennies, like I'm all for that. But to make the point where that Ethereum's monetary policy is an advantage over Bitcoin, I mean, I don't think that's a really good argument. I think the fact that Bitcoin doesn't have this floating monetary policy is actually what gives it its strength. So, I mean, in terms of inflation, ETH issuance, like those are all vectors to really mess around, basically. And I don't know about you, but I'm into crypto, so like that kind of shit cannot happen, So in terms of like Ethereum's potential, yeah, I mean, it does have kind of like a bigger upside than Bitcoin because, smart contracts, liquidity pools, all this stuff is pretty, I think it needs to happen. And I'm glad it's happening. And I definitely want to support that ecosystem. But at the end of the day, if you want to be real, I feel like everything flows back into Bitcoin. Like Ethereum, Cardano, all these other blockchains, like they all get settled on the Bitcoin blockchain. Like the Bitcoin blockchain is the base motherlode layer that all the other chains, and basically it's the only money, it's the only real money out there. So all the other chains basically get settled on Bitcoin. Now if you're an investor and you want to get high returns, maybe you can invest in Uni token, and Uni token gives 1000x because it's a great application. Sure, you can take that gamble, but if you're investing in crypto, I would say basically just dollar cost average into Bitcoin in the long scheme. Like if you're a 20-year-old guy and you want to save up for retirement, definitely don't. I mean, you could gamble a little bit on like a certain DeFi app, see if their governance token, takes off, and then you just made a ton of money. But honestly, a lot of these like governance tokens too, when I read about them, it's like they're voting rights on the protocol, right? Well, basically stocks are voting rights on a company, right? So I'm thinking, I don't know if the SEC is going to allow that to go down. Like I'm thinking they're going to consider these Uniswap tokens, these governance tokens as shares of a company. And they're not just going to allow you to issue it freely. So I think that day is coming where they're going to regulate, especially governance tokens. I think they see Bitcoin as like gold commodity, they'll see ether as like oil to make these apps, but the apps itself will be considered as equity, like shares in that company. So I think that's going to get regulated. And then when it does, yeah, I don't know what happens to the prices of those coins afterwards. So my advice is, this is a very early game, and like if you think that, oh, Bitcoin, how to say, I'm too late to the party, it's already priced too high, I don't think so. I think this next 4 years to the next halving, retail people still have good chance to could still participate. I mean, you can participate forever, just dollar cost average it in, but you're still early even now. So I mean, after the next happening, I think you're going to be a little late to the party, and it may be not. Well, it's still worth it as a savings account, but in terms of like a large return investment vehicle, maybe not so much after the next cycle. Because this cycle, maybe it could go from where it's at like today, 37,000. It can easily go to 300,000, right? And that's still a huge, I don't know, what is that, 10x type return? Whereas after, if it's floating around like 300,000 on the 2004 2028 cycle and it goes to a million, that's only just like a 3x return, right? So we'll see. But yeah, I just wanted to make a video on my thoughts on the whole topic of people saying, oh, Bitcoin doesn't have a huge security or monetary advantage over Ethereum, like the video I just showed you, because you know, what happens to the security after the mining rewards go away? Well, in my opinion, like the way human behavior and psychology works is, if you have a very expensive asset like a Bitcoin, you're going to be incentivized to spend the money to protect it. I mean, we all buy, you know, Trezors and cold cards, and we pay money to protect it. So we see the hash rate go down, and we have like, you know, a whole Bitcoin for our retirement fund. There's just no way that we're just going to stand by and then let the hash rate go down. We're all going to buy asics and contribute to the network to keep the hash rate up. You know, guys like Saylor, all the institutional funds who are buying Bitcoin right now, I mean, you can basically bet for sure they're going to start building out their own asic farms and like pay the electricity fee to keep the security, because in a sense it's protecting their assets. So the argument that Ethereum's proof of stake is a far more secure, better you know, way protocol to do this, I don't think so. So yeah, that's my thought on that. And yeah, thanks.